Good morning and welcome to this month's OakCrest Insight. So last month we began discussions. We started talking about the potential economic impacts of tariffs that we started seeing. And since then, tariff announcements have continued to dominate headlines. Every day we see new media coverage on tariffs, market reactions to these tariffs, and even the latest Doge layoffs. Now, notably, consumer confidence saw its most significant decline in February since the inflation surge of 2021. So with the influx of economic headlines, the markets have really responded and reacted to this. And we're now experiencing a drop of over 10% from those market highs back in February. So looking ahead, you may start hearing me talk more about President Trump's current term as Trump 2.0. So following his initial election win in November, we saw a market rally of approximately 10%. Now, this was driven by investor optimism around anticipated tax cuts, reduced business regulations, and sustained economic growth. These are all policies we observed during President Trump 1.0. Now, our investment team here responded after his initial election win with similar expectations based on that precedent of his first term. However, Trump 2.0 expectations are shifting a little bit from what we expected. The uncertainty surrounding recent policy decisions has caused volatility in the markets, which has impacted kind of some short-term outlook for a lot of people. So unlike in his first presidency, when Trump really induced trade policies gradually, he prioritized market stability. He has now signaled a willingness to endure short-term economic pain and has really come out and said this, demonstrating less concern over immediate market reactions like now. So many economists and fund managers we speak with regularly are caught off guard by this swift market response and Trump not adapting or changing his tune to this. So market uncertainty often stems from the lack of clarity about future developments. And we recognize here that such volatility can feel unsettling. After enjoying 2 years of consistent double-digit market gains, it's easy to forget that corrections of around 10%, they're not uncommon. While this correction may feel different due to ongoing tariff disputes and notable government personnel changes, history has shown that markets tend to recover and reach new highs over time. So when constructing your portfolios and how we look at investments, our team strategically plans for both growth and periods of market downturns like this. We conduct rigorous stress testing to ensure your financial goals remain achievable, even in challenging environments like now. Our investment committee here continues to meet weekly. We want to let you know what we're doing. We're carefully analyzing developments and we're evaluating whether portfolio adjustments are warranted. So far, though, we have chosen not to make any significant changes based on these factors, really. And this is what we want to reiterate to you today. Economic resilience. Now, despite shaken consumer confidence, the underlying economic fundamentals remain robust, and I believe President Trump knows this. Stable inflation. Inflation has remained steady, is not currently a major concern to us. Our long-term impact of cost cutting. Now, while cost-cutting measures may negatively affect near-term market performance like Trump has talked about, they often lead to stronger financial positions in the long run. That is their goal here. So international markets then, they're remaining strong right now. So while US markets have faced declines, international markets have shown some positive performance this year to help clients. Institutional investors are kind of really increasingly seeking international opportunities after a prolonged US-focused strategy the last few years. So although the markets are currently down about 10% from their recent highs, we want to remind you that the S&P 500 really is only down a few percent year to date. So rest assured, our team remains vigilant, closely monitoring market movements and making thoughtful, data-driven decisions for you. So thank you for your continued trust here in OakCrest, and we are committed to navigating these market conditions alongside you and really keeping you informed monthly, just like we do like this along the way. We look forward to seeing you next month on OakCrest Insight.